So, hi everybody, my name's Gary Lorimer. As I was introduced, I'm part of the ITFA Commodities community, but also with Aon Credit Solutions as the Chief Commercial Officer. We're going to be talking about tariffs today, which I know is the buzzword around the market, and I would like to introduce some of my newfound friends and guests, as that's kind of what GTR is all about. So maybe if I can go from my left to my right and start off with Baptiste. Just a short introduction.
Can you hear me? Yeah. So my name is Baptiste Audrin. I'm an ex-banker. I'm the Chief Revenue Officer for Congo.
Good afternoon. I'm Frédéric Benesch, and I'm a director for Connexus International here in Switzerland.
Good afternoon. My name is Jose Gasca. I'm the managing partner of a company called Me Trading International AC in Lugano, Switzerland, and I'm also a managing partner of a company in the US called Gambec Metals. I'm also the chairman of the board of directors of the American Metal Supply Chain Institute, and it's an honor to be here with you.
Thank you very much. Well, now, I know we've only got 30 minutes, so I think if we can kind of get into it straight away. So first question, and this one's for Jose. Given the depth and breadth of your business, Jose, how effective do you believe that the tariffs have actually been in achieving their goals? And additionally, do you think these measures have created an opportunity out of uncertainty? I know we were talking about it earlier today at lunch.
Well, thank you, Gary. Well, we have to realize that for us in the steel industry and the aluminum industry, the tariffs are not a new thing. We started talking about tariffs in 2018. Right? When President Trump had his first administration and his first day in office, he decided to implement tariffs on everything that he could see moving. So, so for us, it's not new. At that time, it was a shock, and I think that this is something that many of you in other commodities are experiencing or experienced at the beginning of the year. So after being so many years in the steel business as producers, working for producing companies and being traders, we immediately realized that it was the time to not to fight the government, not to complain, but to find a way to adapt. So we saw that a global trade was coming to an end temporarily, or maybe for a long time. We didn't know at that time. All our business in the US and Mexico was conducted from Switzerland. We saw that that was not going to be an option anymore. Our banks would not finance that business that easy, and the eyes of the government, the IRS, would be totally in focusing us. So we decided to change our strategy. We opened a 100% US based company called Gambec Metals. We switched it from being a 90% importer into the US into nowadays buying 90% domestic, 10% steel imports. And in addition to that, we were able also to change our concept, our model of just being a commodity trader, thinking about bulk, about big volume, and become a processor. We now process steel, toll process, and we also bought and are building a service center where we can reach actually customers more downstream, right? And at the end of the day, I think that's the new rule for complementation of market. You have to reach the downstream markets and add value to the whole supply chain. And talking about complementation of markets, this is something that I recently discussed with one of the authorities in a panel that they invited me in Atlanta, where a U.S. government official and the president of the AISI was there, and the president of the U.S. Manufacturers Association. And they asked me if there was something I could complain to the government. I told them, listen, yeah, absolutely. I mean, for this tariff implementation, there was no analysis done. Yeah, Why 25% in 2018? Why 50% in 2024? Why not 27.3? I mean, that means that nobody made their homework. Nobody analyzed what was really behind and what was the true assessment of complementation of markets. So the result is that now we have a market that is totally unbalanced. Talking about steel and aluminum, where prices have gone up to the roof. And there is also a scarcity of certain products that are needed in the market and that the domestic mills are not willing to produce.
Frederic, I know, again, this was a discussion that we had over lunch, but have you got anything kind of to add to some of Jose's comments, just in and around the opportunity that you're seeing within your business today?
Well, I agree with Jose while I disagree, meaning that if you consider the new tariffs as just the implementation of a VAT to the US customers, well, then everybody sits almost on the same, I would say on the same ground. What I mean by that is anybody importing into the US will pay 10% minimum. And after that, there will be some kind of a discrepancy depending on the origin. You can see it as something negative or you can see it as an opportunity. For us, we see it as an opportunity because we believe that trading is about grabbing opportunities where they are. Indeed, some products will be difficult to find for the US because 25% increase in prices will just kill some businesses. I'm thinking here of the stainless steel business, for example, because when you see the price of chrome going up by 40% depending on the origin or 25%, we are talking $500 more on each ton of chrome that is entering into the US. So that's a huge amount that hasn't been, I think, calculated, and that's where I agree with Jose, is I think there has been no analysis, and therefore it's just creating an uncertainty that you can see negatively or you can see as an opportunity. What we are trying to do at the moment is different, is just say, what can we do? Well, we have to find new sources where the taxes will only be 10%. On some products, well, for example, we have a cement trading business. We were importing cement into the US that all of a sudden got taxed by 35%. Our customers cannot pay it. So what do we have to do? We have to resell the cement we have bought, sell it somewhere else, buy another place, sell it into the US because you only pay 10% taxes. That's a reality which is really difficult. It's a challenge, and I agree with Jose that not everybody will be able to do it.
Thank you, and maybe we can carry on a little bit down the same line, Frederic, and we kind of talked in and around the experience and the deep knowledge of traders, the fact that they have insight into the markets they're trading in, and you mentioned a period of heightened uncertainty. How important is it for the collaboration between the trading community, and do you feel the current conditions have brought us back to an earlier approach of trading, emphasizing kind of structural creativity and adaptability?
Well, that's exactly the case. I think the days where trading was simple, where you had a screen where you could see figures and add your FOB cost plus freight equals CIF, and based on that, I'm going to grab an opportunity at a customer, these days are over. I think you now have to take into account the fact that if you take a term contract for your purchases, then are you sure you are going to be able to sell everything into the same direction for the next 5 years? No, you are not. So indeed, you have to turn back to, I would say, the old days of trading where you are taking a risk, measuring it your way, and trying to make profit out of it. Indeed, this requires a different approach to risk and a different approach to uncertainty.
Thank you. Maybe we can come to Baptiste now. and I know you haven't got a hat on, but I'm probably asking you to put your old hat on as a previous banker. And during these periods, do we see an increased complex kind of financial instruments used within the trading environment? And are we seeing banks become more flexible or less flexible? How do you see the commodity markets if you were to put your banker's hat back on?
I mean, as some of you may know, so Congo is a provider of solution for off-balance sheet instruments. So we do have around 300 very large customers on the platform. And so we do have quite big volumes on the platform happening of off-balance sheet instruments. We're around 40,000 transactions per month. So we can actually, it's quite interesting to see how they evolve over the months, depending on the geopolitical aspect of it. So clearly, the lines, as you all know, are quite low utilization nowadays. So we see banks coming and being much more interested into trying to find new clients, starting to operate new transactions, being able to enter facilities they would not. So yeah, I definitely think that we see new type of opportunity, which is driven by the fact that trade is clearly going down. We see it in the numbers. We've seen a peak, especially in June, May, June, July, and we've seen the months of August and September being way lower in terms of volumes, and it's very concrete. And so I think we will see it more and more. You have to find capacity, you have to find new opportunities.
Thank you. And maybe that does lead us on to kind of conversations around innovation. And I guess, Frederic, Jose, this was something that we kind of talked about while we were outside. When you look at the stands today, you see some different stands out there, right, in terms of platforms, businesses that can transfer money. How important is that to the marketplace now? And have you got any comments around it?
Well, I think you have, well, clearly when you are outside and you look at the booths when you enter here, what you are seeing is indeed trade finance solutions, which for a GTR event is kind of normal. Then you have payment solutions, which is interesting. And then you have, of course, credit insurers.
I'm waiting for that question.
I'm coming. No, indeed, as Baptiste was saying, the banks are one option today. And 20 years ago, they were the only option you had when you wanted to finance your business. Today, you have family offices interested in entering the commodity trading world. You have ultra-high net worth people interested in injecting a bit of the money they made, sometimes in commodities, by the way. They are interested in re-injecting that money into the commodities trading. Then you have alternative liquidity providers, many of them under many forms. So indeed, for the banks, I think there is a challenge to compete in this environment. And we definitely see that today, when we do a trade, we look at many alternative means of payment, many alternative means of financing. You know, some places you cannot finance due to, you know, it can be sanctions, it can be tariffs, it can be difficulties. And all of a sudden, you discover that everybody has been using, for example, USDT as a means of payment in some countries, even for products which are not sanctioned, but because people don't want to pay for X, Y, or Z new tax or tariff in their countries. So I definitely think that today it's a very competitive environment for any kind of financing provider.
I think that the traditional finance and banking system has also evolved, but has always been very, very conservative. I mean, in some occasions have been more aggressive, but in general has been more conservative. So now with so many changes in the international arena and so many unilateral protectionism in some countries, obviously, they want to make sure that you know your business, that you know your markets, that you know your customers, that you've been in the business long enough to guarantee that if you have not seen everything, you have a good experience, and through the years of knowing you, they also want to make sure that you take them as a partner, and you are also here to protect their interests. So I think that's something that we continue to take very, very important. Banks, our credit insurance, obviously. Our credit insurance, I think that will become even more important than what it is now. It's an expense that, in our opinion, in our case, we have never used. We have never presented a claim for credit insurance. So one could say, okay, it's a bad expense, but no, I think that is the best money you can invest, because in the future people are going to look very much into it, and now banks also in the U.S. are starting to look into use it as a collateral for payments. Just one more comment about tariffs, because maybe I was misunderstood by Frederick. But and we didn't answer your question, Gary. If the targets were met and accomplished, I think the targets were met and accomplished, because now, I mean, the tariffs were implemented regardless if it was called Section 232, national security. They were implemented to protect the U.S. Steel industry. So yeah, the U.S. industry was protected. They had the opportunity that in 5 years, build 4 or 5 new mills with top technology. They're the most modern and efficient mills in the world right now. Talking about Big River, SDI, for example. So that's target number 1 was accomplished. And for us, it was also obviously an opportunity, because before being a trader based on volume, now we do probably 3/4 or even less than the volume we were doing, but our profitability is 2 or 3 times larger because of that gap that we found, same as many of the other colleagues who still trade in the Americas.
Thank you. Look, I guess, Jose, given that your business is primarily steel, right, and that tariffs have been a real theme for you moving forward, what type of practical strategies did you kind of look at within the business when these came in? Was there a point where you sat down and said, right, everybody, we need to trade in a certain way, we need to circumvent these trades? Can you just elaborate a little bit around when those came in? What were the actions you took as a trader?
Well, the most important strategy that we had to implement was to find a way to replace our global sourcing that was no longer being competitive because of tariffs or even increasing freights. So we had to look initially for nearshoring. We looked at Mexico first, so that was a good opportunity. And then in parallel, we started developing all the relationship with all the mills in the U.S. Some of them we knew, but from the other side, we were instead of buying from them for the domestic U.S. market, we were selling in Europe and in the Americas their products. So that was a change in our strategy, number 1. The second strategy, equally important, was that instead of selling to retailers, distributors, we decided to go further down into the more value-added markets, and our target now is to sell to end users. Yeah, big OEMs that are looking for a supplier that can not only fulfill their sourcing needs in the short term, but they look more long term. They are now looking into fixed price indexing, into hedging, inventory handling, inventory management, the consignment agreements. These are things that we are developing now, hand-to-hand with many financial institutions and bigger international commodity traders that we have a relationship with.
Thank you. Baptiste, having a business that's largely built around technology, amongst other things, and I think before we entered the room today, we kind of talked and joked a little bit about blockchain. I know your business has changed over this period of time, but maybe you can share with the audience here today where you think technology is going. I know that you're aggregating information for banks, for clients, and where you saw the kind of the point in which you said, right, we were looking at blockchain originally, but now we're going to pivot slightly to a slightly different technology because we know the opportunities there. I think everybody would like to hear about kind of how data innovation is changing, not only for traders alone, but just in general when you're aggregating information like you are for large clients.
Yeah. Indeed, we started Comgo 8 years ago on the blockchain dream of changing everything thanks to blockchain. We pivoted quite quickly because it didn't happen. Hopefully, we pivoted quite fast. So I know what it is about to think about a new technology changing everything. Obviously, AI is at the center of all our discussion today. As I was saying to you, I think we should look at the technology and where it started. So if you look at blockchain, it started with Bitcoin, all of us buying Bitcoin. And this is where it grew, and this is where it performed, and this is what it is today. And it is used, as you mentioned, it maybe even stable coin for Tether, for transaction. And I think it's probably going to be one of the big disruptions of the next years. Now, when you look at AI, I think AI really started for all of us via contextual chat. And I think if you have to think about how you're going to use AI in the coming year and what is going to grow around AI, is going to be around contextual chat. So we are, for example, implementing in our solution this contextual chat that allows you to ask questions to your system before you go to, I don't know, meet BNP Paribas, and you actually want to know how many LCs, how many transactions, how many fees you paid. You can actually extract all this information really fast and be able to take decision to help you in your process. So I think we should not overestimate what we'll do with AI in the coming years. I'm not saying 10 years, but in the short term, I think contextual chat is going to be a big thing. Now, when it comes to technology, I can only talk about trade finance because I think that's more our topic. There are a few things quite interesting happening. First, the ICC is working on standard when it comes to connectivity with banks. And so this standard will help us connect and try to standardize the big trade finance that is a very not standardized market. And we see this happening as we speak. The other point is trade finance is an aging business. Like we really see, if you look around, we're all getting older and older. There's less and less young people around. And
speak for yourself.
and so I think we will probably replace the knowledge that we all have accumulated over time by this machine learning. And I think that our systems, how I see them at least, they will be here to help a treasurer of a trading company or of an industrial company not to have trade skill anymore because they will be useless, but be able still to have support in order to take decision on some dodgy LCs or guarantees. But most of the flow is going to be very, very standardized. It will take time. I'm not saying it's next tomorrow, but I think it will happen quite fast. We already see it in big trading companies we work with, the one with a lot of power. You look at it, they already standardize their format of LCs. They already have libraries of this format that are agreed with different players. So we already see that it's happening. When you look at the normal industry, you see a lot of traders, a lot of big companies we work with. They actually process automatically these guarantees. They select their banks automatically. For example, one of our clients, Siemens, they issue 14,000 guarantees per year. So it's more than what Traffic Grab process actually per year. There are 5 people managing that. So it's not obviously not the same size as the DLC of Traffic Grab, but we're going towards standardization. Voilà. I'm not going to monopolize that. It's about US tariffs. So.
Thank you very much, Baptiste. Frédéric, we often hear about market volatility, right? And when we think about traders, we think about, in the press, sharp margin calls. We've just seen an energy crisis, very, very recent times where some larger businesses got caught out with margin calls as well. Given the unpredictability and volatility of the market currently today, do we think there's going to be an increased level of those types of margin calls? And for kind of, I guess, commodity traders to try and source shorter-term forms of liquidity to bridge that gap. I just wonder whether the geopolitics, we've talked about the US, we've talked about everything that's happening around the world, do we think that's going to be more common, or do we think the traders have found a new way around that because they're less reliant upon one source of liquidity? Sorry.
Well, I would love to have an answer about what's going to happen in the future, but realistically, well, to answer the later part of your question first, definitely what we are seeing, and I think Jose mentioned it, we are seeing a de-globalization. And I think we are seeing more and more regional markets with their own customs, with the way they work, with their tariffs, with, let's say, the practices are becoming more and more regional, not to say local in some regions. This is indeed pushing us into finding ways to do our business. Among these, we have to find ways to finance our business. Definitely, when you talk about margin calls and exchanges, definitely we are always looking now at how to finance, even if it's a hedge. How do you finance your hedge? You know, 20 years ago, you were buying a swap or selling a swap. It was very simple. Nowadays, you're going to calculate the cost of an option and say, well, it's more costly than a swap, but I know how much I have on the table. So maybe it's going to be another way. Ideally, we would love to have solutions provided by a bank, a service provider, but we have more and more to aggregate 2 or 3 different layers of services. It can be a bit of insurance, it can be short-term financing, it can be pledges. We have to find ways, and I think that's where, and that's where I disagree with Baptiste today, at that point, is it's not about artificial intelligence. It's about human intelligence. It's being able to aggregate elements that have nothing to see. It's about how do you finance receivables in the center of South Africa when no credit insurer wants to take it. If you see what I mean.
I can see a couple in the audience. Okay. I'm sure they're happy to have a discussion.
And definitely, joke aside, definitely we have markets that are becoming way more regional, but to the contrary, we have a financial market that is becoming way more standardized and global. So this is where we have to find means in the middle. And it's definitely becoming a key issue. You know, in the past, the trader was buying and selling. Now he's buying, selling, and making sure he can comply with the obligation he's taken. And he's got also to manage the risk through instruments that are becoming more and more difficult to anticipate and predict.
Jose, we've got 2 minutes left, and I'm looking at Jack's eyes staring at me across the side there. Any comments on top of Frédéric's comments around margin?
No, I agree with Frédéric. I think that our role in the market, being in commodities as a trader, sometimes is confused and is being seen as an opportunistic. But however, few people realize that there is a lot of experience, a lot of bad and very good experiences behind. So that's going to be very difficult to replace in the future. That's going to be always needed. Yeah, scenarios change. I mean, now we're talking about tariffs, protectionism, but who knows that if next administration or in 2 administrations, different parts of the world, again, we come back to globalization. I mean, the trade will tell. And obviously, the only thing that I personally think is that AI definitely is something that can be well implemented in our sector, in our industry. I yesterday had a conversation with a supplier who wants to sell us a software on that. So one and the other are complementary, and I think we all have to look into that.
So last round up before we finish the session, just a question, Baptiste. what's keeping you up at night in a short sentence?
Just 2 seconds. We do have a product that is called credit optimization that is here to to optimize margin calls.
Okay.
So just want to highlight that indeed they mentioned we used it during the Russian crisis. Obviously, we had a lot of margin calls. It helps you reduce by triangulating it, and what we see is that indeed traders are now equipped, and I don't think margin calls are going to be a problem or our problem anymore, at least on the market that we cover, which are energy and power in Europe. Yep. So what's keeping up at night on my side is just managing people. I mean, we all have to do that, but people leaving, people finding the next talent in order to open the next office, and that's what's...
Jose, and you can't answer the question, it's my next Ironman, because I know you've just come back from running, cycling, and swimming. And what's keeping you up at night?
My colleagues in the US.
and last comment from Frédéric?
Well, I'm a bit like Jose, but also the changes, meaning that every day when you think the day is done, there's always something happening that will push you to work until very late, and then you understand that the next morning will be busy too.
Thank you very much.